All right. Let's see if this is live. Looks good. All right. So, welcome to the Trading Homework broadcast. Today is February 18th, 2021. And we're going to do a couple of things today. So, one, I'm going to review some of the moves that I made today. Did a few new entries, and I also closed out a GameStop long that I had. So I was watching the hearings on one of the streaming traders, and it wasn't so much that that they were saying anything bad, but what happened is that guy, Deep Fucking Value. Let me adjust this camera a little bit. I think I bumped it the other day. Yeah, that's a little better. That guy, Deep Fucking Value, when he first came on, the stock had a pop. And it just kind of sagged from there. And I thought, well, it looks like it kind of flushed to the upside here. And so I ended up getting out. What I had was an at-the-money call from, I think it had a March expiration. It was... I originally got it at 51, I think, or maybe 55. I think it was originally 55. But I also bought a short-dated put, and then the GameStop price fell down to around 50. And so I ended up rolling that down to a 51 and rolling my put down slightly. And I think I rolled from a 50 put to a 47 put. And then the price went down again. And I think what I ended up doing was having to roll in on the calendar because the lowest expiration for the calendar I was on was 50 and a half. And so I ended up rolling in 1 week, and it still had 3 or 4 weeks to go before expiration, the call that I had. And I had to keep the puts really short dated because it's just such a high implied volatility stock that the protection is expensive. And I ended up getting out of it today because I looked at getting puts on it. It's just so expensive, and plus I don't want to be betting against the retail crowd on GameStop. I mean, there's plenty of places to make money. I don't need to be like shorting GameStop. I mean, if it's a strangle or a straddle, that's different, but I mean, just going into a put spread, nah, I'll just wait for it to go lower. And rather than paying up for protection and rolling down like I might normally do, I'm just standing aside and letting it fall where it may, because it broke down out of range. There's still maybe some support there. So here it is. There's still some support here, but it's kind of in this 35 to 45 zone now. And I'm going to let it kind of find support and make a base on a short time horizon before I get back long that stock again. So tomorrow is Friday. I'll be rolling puts on a whole bunch of positions. Let's talk about the 2 new positions I put on. I wish I remembered the name of the streamer I was watching today. That both of these stocks came up on his stream. So one of them is Workhorse, and I got into Workhorse, I think right around this area, and kind of rode it up and then rode it back down. And I didn't ride it all the way back down. I got out here when it sagged around 37, and I didn't want to just keep riding this thing lower. It looked like the momentum had broken, but now it's kind of at support. So sort of like with GameStop, if it falls down into this zone and starts making closes inside of the range from 15 to 30, then I'll close the position. But if it bounces here, then that's a good thing. What I may do is roll down once to the 50-day moving average. And then if it doesn't bounce quickly, then close the trade out. So that's what I'm looking at with Workhorse. let's see here. Okay, so the other trade I put on today was put on a new position. I mean, I did a whole bunch of activity, but these are like new, let's call it intermediate term positions that I put on. Workhorse was one. What was the other one? It's on the list of, let me pop this up for you guys real quick. The high short interest stocks. This is a cool site, highshortinterest.com. Cost looks like it came to life today. I didn't get into it. It doesn't have options. It's just something I'm watching. The other one was, I mean, some of these aren't acting so good, like Laser. I'm in Laser, and it's just kind of hanging out. It's further down. Workhorse and Fubo. That's it. Fubo TV. So I got into Fubo TV. Let's talk about that one real quick. So there's a kind of a cup and handle here, and actually this is a really deep cup. This is not like a cup and handle base is not supposed to have a 60-something% drawdown, whatever this drawdown is, as the cup. However, the price range that this thing has is so large. Like this is more like what a cup and handle should look like. If you look at from this 14 down to 9, it falls like 30%. That's a healthy cup. And then this little handle here is just a few weeks of tight, or a few days of tight closes. It should be, the handle should be about a third the length of the base. So whatever time frame you're looking at, and a lot of stocks that you look at on a daily or weekly chart, they're just running up, up, up. If you zoom in and look at them, they're making little cup and handles and things like that on the smaller time frames. So it's a good thing to look at. By the way, I'm enjoying a beer with you guys tonight. What this one is this is a Schlafly coffee stout. So there we go. It smells delicious, and it tastes pretty good too. I bought a whole bunch of it, and this is the last one that I have. If you like interesting beers, this is definitely an interesting one. All right, so anyway, the reason that I am kind of calling this a cup and handle is because there are a few good characteristics about it. It found a bottom, and it's been finding higher bottoms. So it's been making higher highs and higher lows for a while. And we could say that these are some tight closes on the daily chart. And the duration is about right. Like it's the number of bars on this handle, or about a third of the number of bars that it took to make this base. I was in Fubo TV earlier. Like I got in on right around here, the end of January. And it might have been real close to the beginning of February. Rode it up a little bit, and it ran out of gas. And I didn't like that it couldn't take out this old high. So I got out. And I don't know. We'll see what happens here on this. So similar kind of deal. Like you may find support down here at the 50-day moving average. I have a protective put that protects a at the money call, and if it goes down, then I'll just roll lower. You can do that until you run into earnings or something like that can make the puts really expensive. And then there are other ways that you can protect the call. All right, so anyway, let's see here. So we talked about Fubo TV, we talked about GameStop, we talked about Workhorse. What else is going on? I'm still holding Riot. Riot was down a lot today, 20%. A lot of people thought that it was going to make a bottom early on in the day, and it did, and then it came back down. I'm not really too worried about this. I already sold half my position on this one. I think that this is going to be good as long as Bitcoin is good. And yeah, it's overheated. It's really overheated. So a break is good. I don't like seeing this huge volume with a close near the bottom. But I mean, the drivers for what's making this thing move is the Bitcoin stuff. So I mean, that could be fuel for a move for a long time. I didn't do a bull call spread on this. It's just calls. And I used to have protection, but it's up so much that that protection is now basically worthless. I do have some deep out of the money puts in case there's a calamity, but they're not going to protect for anything other than that. The other one I talked about switching half my position in Riot over to Marathon Patent, and I did not do that. It would have been fine to do that, but instead I just I went into other things. Sometimes it's better to just diversify and spread out when there are other good things to put money into and the market is in an okay mode. I don't know that the market is necessarily all that healthy under the surface. But I have portfolio level protection in the form of puts on HYG. So I got some out of the money puts that have about a month of duration on them. And if the market goes into any kind of a downturn, this should get hit pretty hard. If it's a serious downturn. If it's not a serious downturn, then this thing will just sit here. Let's take a look at VXX real quick. Yeah, see, that's just hanging out. It's not really showing a lot of stress. This stress right here, it was coinciding with the GameStop move. Like, that's why they're doing those hearings right now. It's not just GameStop. It's like they're looking at this VIX spike, and they coincided with the crazy move in GameStop, and they're saying, uh-oh, we might have a problem. All right, so on the right side of my screen, you'll see a list of ETFs. So I wanted to take, this is something we haven't done on the show yet, is I wanted to go through this list of ETFs and just review all the charts, and we'll talk about the relationships between some of these ETFs. We're going to try to find ETFs where there may be emerging trends, and then we can use those findings to try to maybe zoom in on those sectors or industry groups and try to find stocks that might give a really great opportunity, perhaps better than the ETF itself. So I'll give an example of that. I've been watching Uranium for a while, and this is something that I was tweeting about in this zone when it was breaking out in December, and somewhere in here in the first half of December, I was tweeting about this with some other folks. It looks really good, but what I figured out to do is that CCJ is in the Uranium ETF, and it has a much more liquid options market. So this is the way that I'm putting a play on in Uranium. The other thing I want to jump to is let's talk about the marijuana stocks a little bit before we jump into the watch list stuff. And if you guys want to steal this list of ETFs, that's cool. Just screenshot it. I'll have it up for most of the broadcast. If you want to know how I made that list, it's pretty easy to make a similar list yourself. So let me just show the process that I went through to make that list. Excuse me. So here it is on FinViz, a screener. And you can just drop the industry filter to exchange traded funds. And then what I did is I sorted them by volume. And I think I had a filter for ETFs that were up for the year, but I think I ended up taking that off. And so I just went through all these pages and grabbed all the ones that weren't leveraged or inverse ETFs and that that looked like they would fit well on the list. So that's a good way to build a list kind of like this. And so what I'm hoping is that reviewing all these charts, we're going to click through every one of these, and we'll talk about them. And that will give us a feel for the financial landscape right now. And some of these are country ETFs, some of them are sector ETFs. There's a lot of exciting things in here. The other thing I tried to do was group them. So they're not all perfectly grouped, but I tried to group it so the conversation could kind of flow. And there may be a few things that are not in the best order, but we'll get this order changed up. And this is something we'll probably be doing fairly regularly. All right, so I want to look at, I don't know if we should look at monthly or weekly today. Why don't we look at weekly? That's probably a good time frame because I want a big picture view. All right, so let's just start at the top of the list. Before we go through that, I wanted to talk about the marijuana stocks because there's a lot going on here, and I have a number of these. So it's down, but the volume's not huge. Tilray reported today. Or maybe it was last night. So zooming into the daily on this, to me this just looks like it got ahead of itself for a couple of days, and now it's just in a consolidation. That's what it looks like to me. I think that the drivers for a long-term growth in this sector are there. The potential's there. As far as timetable, I don't know about that. I don't trust the Biden and Harris administration to how do I put this? To oversee the decriminalization of marijuana. I mean, these are some of the people they're a big part of the drug war. Like, they made their careers on it, really, in a way. So, they're the first fireman to the fire, I guess, here. I mean, I don't know. I don't have much trust in them. Or when it comes to the marijuana sector stocks. So let's just flip through a few of these. I'll show the 5 that I have. I've got positions in 5 of these. So I have this one, AFA. I didn't know this, but AFA is the largest holding in the MJ ETF. I'm not sure why I didn't know that. Maybe it's because, how long has this thing been around? Well, it's been around a long time. I don't know, this one just wasn't on my radar in the way that like Tilray and Cron and some of the other ones were. The other thing is there are some, I think like Sundial, I don't have that one. It's like a penny stock. So, I mean, to me, this is a penny stock. I'm not interested in this. So if you are, awesome, more power to you. It looks like it's trading 6 billion shares a month. So, I mean, this could be a really great opportunity for people. This isn't something that I'm in. I mean, maybe there's more juice here. Let's do this. Let's make a ratio chart with Sundial growers and MJ ETF. So it's outrunning the MJ ETF. We'll do this with the other ones too. So it looks like on the way down it underperformed, and then on the way up for that sector it's outperforming. Okay, so that may be a way to get juice if you don't want to trade options. So kind of interesting. And maybe there's a fundamental story here that I'm not clued in on either, or that this is a heavily shorted stock or something like that that's giving it some extra juice. I don't know. All right, but anyway, let's keep moving. I like the idea of putting these into ratio charts with the sector. So let's do this with AFA. Yeah, that's also outrunning the sector ETF. So I don't have the sector ETF. I don't know what all is in it per se, but okay. The next one I have is ACB. This one is not outperforming the ETF. So that's interesting. If I sour on the sector, this would be a good one to drop first. If it hasn't already been outrunning the sector, then it may not start outperforming the sector. It doesn't have to. So the chart for this looked pretty good on the daily, but it's kind of weak now. Rather than roll down, I might just close this one out. I mean, I've already got 4 other ones, so I don't know. I'm less excited about Aurora Cannabis now. Okay, next one, CGC. Some pretty solid down days there. I mean, it's this drawdown. It was fine until today, and now it's like kind of trying to find a bottom, which it may not do until the 50-day moving average, which is still 10% lower. That would be it found support there in the past, right here in December. So that's kind of my expectation. It might take a while to get there, and the longer it drifts near, kind of above that, the higher this moving average will rise. The other thing I'm going to call out is at this point it's trapped between the 21-day moving average and the 50-day moving average. So this is a 21-day EMA and it's a 50-day SMA. So I do want to draw that distinction. The last time it bounced, those moving averages were closer together. It was in a base. I wouldn't say that it's basing right now. I would call this a shakeout, what's happening right now. And the volume is kind of muted right now. But these things all caved in at the end of the day, all these marijuana stocks today. They were looking pretty good until today, hanging out above the 21-day EMA. So they may have to go lower to find support. So let's do the same thing. Let's put this into a ratio chart with the sector and zoom out. This is a good way to tell, where you should be focusing. So CGC is, this one was not as good as AFA either. And so AFA being the number one in the ETF, in this case, it's actually a really positive thing. A lot of times being the number one thing in there is kind of a curse because you might be a slower moving thing. But it looks like that's not really happening here. So if we race off AFA against some of these other ones, you'll see that, it's a better, or it has been performing better. So money invested in AFA has been more effective recently than in CGC. Going forward, it could be anything, but it's good to know what these relationships are. Let's keep going. Cron is another one I have. Let's look at the daily. Yeah, so this one's holding up pretty good compared to the other ones. I'll do ratio chart of Cron to MJ. And it looks similar to CGC. Not too surprising. And now the one with the most short interest, at least to my knowledge, is Tilray. So Tilray, I don't know that it's outperforming AFA. Let's take a look at that. It's outperforming the sector. Yeah, maybe just a little bit. So AFA and Tilray seem to be the two big movers here. And I think Tilray got ahead of everyone. Like this move was huge. I actually sold, not quite at the top, but kind of near the top on the day that this spiked up. And then the very next day, I just went right back in after it had fallen like 48%. I just went back in and put the position back on. Interestingly, had I held it, it still would have been a hit. But when I closed that position, I also closed the put protection, which was worthless. It was just a blunder. I shouldn't have done that. If I had left the protective put there, it would have shaved some off the cost of when I went back in to buy it the next day. I could have got rid of that put, or maybe even used it to protect the new position that I got. So that was a blunder. Shouldn't have done that. When I sold some of the Riot position I had, I did leave the puts untouched. So that effectively gave me a little bit more protection on the position that I did have. Although those puts were so hammered that, I mean, they'll probably be worthless. But I mean, why throw away a free thing, right? I mean, you never know what's going to happen. Okay. So let's now move over to these ETF lists. Let's go through those, and I'm going to crank through some of this stuff until I have a comment to add. And I think I'm going to keep it on weekly. So we're trying to get a big picture. So there's the S&P 500. Quite a bit of context there. Do I have any interesting observations about this? It looks like it's kind of riding just underneath the upper Bollinger Band. If this rises up above that Bollinger Band, let's look at it on the daily and see what it's doing. Yeah, so on the daily, it's kind of bouncing between the 21-day EMA and the upper Bollinger Band. It's kind of in that range. So if it gets so strong that it starts making closes above the upper Bollinger Band, it's probably a good time to set some trailing stops on positions, or just mentally be ready to sell into strength, or maybe write some calls, some out of the money calls on positions. These are all things you can do. It depends on what kind of position you're managing, but that would be very overbought if it gets above on the daily chart. Like, see this one right here, where there are two closes above the upper Bollinger Band. It couldn't hold it, and so I mean that's typical. Like here, it shot up above it, couldn't hold it, and what happened was what followed was consolidation in these cases, in both of these cases. Like in this case, consolidation happened. In this case, here in January, consolidation happened. So that's what I would expect. And there was one close here above it. And what's happening now? Well, it's kind of consolidating. Like it tried to go back up, retake above the retake the upper Bollinger Band. It couldn't do it. So and look at this one. A couple of you just like one close right here in October of last year, and that was it. Like it. You can make the case maybe that's a close above the upper Bollinger Band in early October, so maybe two. But this was pretty major pullback in October. And that was heading into the election. So that's something to watch for coming up in the S&P 500. I think if we go down to this 21-day EMA, you can kind of maybe look to start getting long things, and then like maybe that's a buyable dip, or you're in a region in time where there are some buying opportunities if you're trying to buy cheap. And then on the bounce, like watch for things to break out. And all right, so that's SPY. SPY is a hard chart. It's very choppy. It's prone to pullbacks. It trends sometimes. Like look at this trend. So anyway, let's keep moving. Some of these I'm just going to cruise right through, but SPY is worth taking a little time on. All right, so same thing here with IWM. It's just riding, this upper Bollinger Band on the weekly, and it's now below it. Interestingly, like it was riding right on it for a while. Now it's below it, but I mean I wouldn't say that it's weak. I'd say it's pretty strong actually. Will it continue to be strong? Who knows? I mean, it can keep on doing this for a long time. I don't know that it will, but one other thing I'm going to call out is this is a ratio chart I look at a lot, is IWM to SPY. And let's zoom this way out. So in 2020, the small cap stocks got completely crushed. And I thought that this was like lights out for small business. And I thought it would continue to keep getting worse, but it hasn't. It's kind of like sprang back, and It's been really strong lately, surprisingly strong. So have a lot of other things that you wouldn't necessarily think. They're counterintuitive. Okay, so that's that. QQQ, same thing. I mean, these are all really similar charts. I will say this, like QQQ is up a lot higher from the left side of the chart to the right side of the chart than a lot of other things. XLK is the tech sector. I plucked that one out. Down lower on the list, I've got some other sector ETFs. I pulled this one up so we can look at these tech kind of things all at once. So SMH. I don't generally deal with XLK because it's just a little less liquid. Oops, and I did not want XMH. I want SMH. Semiconductors. So this one's really strong. Let's look at it as a ratio chart to QQQ. So QQQ has better liquidity. SMH has better performance. One of the large holdings of SMH is Taiwan Semiconductor, and that kind of makes me nervous a little bit. But I mean that stock is so strong. The thing I don't like about it is what I would consider maybe geopolitical instability in the area. Tensions with China we see with Hong Kong. It could spill over into Taiwan. And if it does, what will be the fate of Taiwan Semiconductor? I mean, maybe nothing, but it's a concern. And I'm going to jump out of order here, and I've already been through a lot of this list, but let's look at FXI. I want to show you guys something that really jumped out to me. Let's zoom out a little bit on this. I want more time on the chart. I'll put these settings back. Yeah, look at this. So really long-term chart, monthly chart here for FXI. And you can see this resistance back here at the end of this run-up. This was the BRIC era. Brazil, Russia, India, China were the hot thing. And I think BRIC was a theme that came out of the investment banks, kind of like FANG is a theme that's sticking around, but BRIC is nobody talks about BRIC anymore. But at the height of the BRIC thing, which it peaked in 2007, before we had the financial crisis. Good to know. The peak of FXI, and this is like a split and dividend adjusted chart. I don't think that it's had any splits. In fact, I'm pretty sure it hasn't. But it may kick out dividends. So anyway, the point though is it looks like it's just about hitting new all-time highs. In fact, I think if you take the dividends out and you don't adjust for dividends, then this price was slightly higher, I think. And so when you dividend adjust, it pushes the price down. So accounting for 14 years of dividends, the actual price might have been higher. We can go check on Yahoo and see what that peak was. In fact, let's do that. I mean, this is trading homework. So, we're going to answer those kind of questions. Okay, so here's FXI. I'm going to historical data. And they used to show you, so they have a close and then they have adjusted close. So we'll be able to go back and look at 2007. 2007, and I'm going to bring up, let's say July until October. In 2007. Why? Yeah. Look at that. It was much higher. The actual share price. So this matters. Let's see if we can pick out where that peak was. So it ran up. It looks like it's still running in October. That's probably about the high. Let me extend this out to November. Okay, so let's look at these highs. 73. $73.19 was the real high. So that's good to know. I mean, those dividends are long gone, though. Everybody spent those, I'm sure, or reinvested them or whatever. Okay. So, but anyway, like here's the main point, though. Like even just this structure right here, where if you draw a line down across these peaks, and then you know, looking at this, it's making these cup shapes and saucers and things like that, and showing big strength right now. However, the volume is drying up. Perhaps we're looking at 4 years or possibly 8 of a U.S. administration that is China friendly. So looking at China stocks might be a really interesting thing to do. There have been some crazy ones running right now, like EH. It's just been out of control. And these things, like, I don't know who all was following the Luckin coffee thing, but I mean, that's surprisingly more common than not for Chinese stocks. You know, you might think you're investing in the Starbucks of China, and then, you know, it comes out that the story isn't what you've been told, and then, you know, your stock becomes a pink sheet stock. It gets halted, and there's no chance to get out. These kind of things happen. So anyway, with EH, I'm zoomed way too far out on this, and let's adjust these settings. Okay, so EH, incredible runner. This one was on my radar in January, and I mean, the volume on that rally yesterday, crazy. I can't believe it's bigger than the volume on the drop. I mean, look at that drop. It's over 60%. This is not a bullish pattern, though. If it keeps making inside bars, it's kind of what I would expect. And then it could break hard up or down. It's hard to predict. All right, so this is a Chinese stock that's going completely nuts. If you look at what they do, I looked at this, and I don't remember if it has no options or it has some options. Let's look at that. But I decided to just watch it and not trade it. All right. So this is operates as an autonomous aerial vehicle technology platform company in the People's Republic of China, Europe, and North America. Excuse me. You can see that it's Guangzhou, China, is where the headquarters is. So it's an aerospace and defense company. What are we going to look at? We're going to look at statistics. Oh yeah, I wanted to look at options. Either they only have monthly, or they just don't even have options. So it makes it a lot less interesting to me. All right, let's keep moving. Gosh, we have not gotten very far. This is always what happens on these. I just have a ton of commentary on everything I'm looking at, and I don't get through the lists. But anyway, here is the list, though. So if I don't get all the way through it on the live stream, you guys can screenshot it and, you know, go through the list yourself. And I've also showed you earlier in the broadcast how you can make your own such list. All right. So ARK. And let's benchmark ARK against QQQ. So ARK has, I mean, this truly is an innovation ETF, and they're fantastic. It's been outperforming the QQQ tremendously. It used to not have weekly options. Now it has weekly options. I don't know that it will continue to outperform without a correction. The amount of companies that they can meaningfully invest in at higher and higher capitalization for ARK. I mean, I don't know. I think I'd be looking at NAV, net asset value. I'm not in ARK, by the way, but if I was, I'd be looking at the net asset value of all of these funds, all of these ARK funds, and comparing it and finding out, like, well, am I overpaying in one of them? You know, if the premium is too high. Yeah, it's an ETF, so it may be that they're the institutions are able to create shares and keep the premium. You know, it's not a closed-end fund, so you know there may not be much of a premium on any of these. However, when the fund has a capitalization that's like a third or less of what it is now, you know, it's a lot easier for them to find opportunities to put money to work. All right, so here we are back on the weekly. ARK is just crazy. This is also one that's riding the upper Bollinger Band. It's so strong that it can just like make close after close after close above the upper Bollinger Band. Something interesting to do would be to look at all of the holdings in ARK. But let's look at all of these other ones. So ARKF, it's their fintech one. Let's benchmark this against ARKK. Outperforming only recently. Okay. ARKG. Their genomic revolution one. I think CRISPR is a big holding in this, and that one, CRISPR has been kind of lagging. Let's actually bring up the holdings for this one. So I don't want to say the wrong thing. ARKG holdings. Yep, there it is. CRISPR. CRISPR's in ARKK as well. All right. Oops. That was the wrong window. Sorry, hang on. Find my chart window. There we go. All right. ARKW. So my problem with some of these other ones is they're a lot less liquid than ARKK. That's why I put that one first. Let's look at print, which is the 3D printing one. This one has just been doing fantastic. It looks a lot like the solar ETF to me, just eyeballing it, which I actually have coming up soon on the list. Let's benchmark this one against the ARKK. It's been outperforming lately, but that's it. The volume levels on this one, the liquidity is just so high. It's great. All right. Next one. This is an AI, or robotics and artificial intelligence themed ETF. If you look at their holdings, you know, it's going to be skeptical of all this stuff and look at the holdings, because when I look at the holdings for this, you know, I'm not super convinced that it's yeah, I mean, it's okay. So NVIDIA, that makes sense because their graphics boards are used for machine learning and deep learning and things like that. Intuitive Surgical, that's interesting. So I guess robotics used in surgeries. So anyway, interesting. All right. All right, solar. Solar's on a hell of a run. It looks like it's now consolidating. We can look at what the holdings are in that one too. Because this has changed over time. It's sort of like MJ. I was surprised to learn that APA was the top holding. So if we come in here and look at the holdings of TAN, First Solar is not number one. I was surprised by that. So if you want to, you can maybe get better liquidity out of some of these individual names. I don't have anything going in solar right now. PBW is next. So this is a clean energy ETF. To me, that encompasses more than just solar. Let's see how it's doing compared to TAN. Yeah, pretty close. And I think TAN has a better liquidity. So TAN at $108 this week has done 7.7 million, whereas PBW has done about half as much volume at a similar share price. So you get a little better liquidity with TAN. And I know that TAN has weekly options, so that's interesting. Let's actually zoom in on TAN as well. Okay, so it's in a dip. It looks like it found some support at the 50-day moving average. Not surprising. That's why I put it on the chart. I mean, look at it right here. It kind of like came down to it, found support. There's also a price level here around 108 that looks, 106 to 108 that looks kind of solid. Will it fill the gap? I don't know. What's next? iClean. Okay, very similar looking chart. Let's flip back to the weekly. And let's compare this one to the solar one. So this week at 27, it's done 27 million share. I mean, it's got some liquidity. Benchmarked against TAN, it is underperforming since 2020. Okay. These things have different holdings. There may be some overlap, but maybe not. I don't know. Next one is LIT. So this is interesting. Global Lithium ETF. So I think these are, let's look at their holdings and see what's in there. LIT. Holdings. Okay. Panasonic. Samsung. It has Tesla. Okay. And that's not even their number one thing. Well, that's interesting. All right, let's keep it moving. I'm going to skip over MJ now because I already covered MJ earlier. So if you're watching this live and you want to see MJ, you can rewind to that part or watch it later. Jets. I'm surprised with how much liquidity is in the Jets ETF. And this one looks like if you're patient and you make a, you want to do a long-term campaign, like something I talk about, it's just now closing near the old highs from last year, off the March bottom. So this, to me, it looks almost like the same chart as Carnival. Let's zoom out, put it next to Carnival. Yeah, so Jet's actually outperforming Carnival. That's kind of interesting. Good to know. So yeah, this is interesting to me. Something that I talked about yesterday with Chris was we were talking about Carnival. Getting some out of the money calls with about a year duration, or like a leap that has out of the money strike price kind of near this resistance level. And so the idea is when the price comes up to that resistance level, hopefully you'll still have plenty of time and you can then roll in on the calendar and get yourself a protective put once it's at the money And then now you're in a swoosh position, like how I like to trade. So that opportunity, it looks like, is here also in jets. So I'm going to add that to my notes, and I may do something like that on jets. We'll see. I'm already doing it on Carnival. I don't know that I also need to do it on jets, but you know, why not? It's cheap to spread it around. I mean, you know, these are really cheap options that we're talking about. And if it works, it works. If it doesn't, well, you know, that's how it goes. All right. Okay, now we're in the miners. So this is a little bit of a jump, but I don't know why I put the miners before I put the metals. But let's just go through it in this order. So today it closed, it closed. Is that the close? Yeah, it closed underneath this old low. That's kind of negative. So if you're like me and you're nibbling in this sector anticipating inflation, well, we may need to be more patient than what we thought a few weeks ago. So if you didn't get enough duration, if you're nibbling out of the money on stuff, then that could hurt. All right. There is a support level around here, this sort of 29 to 31 range. Also, it's near this lower Bollinger Band. It could just ride that lower Bollinger Band for months. I don't know what it's going to do, actually. I think that the silver looks a little stronger, so we'll come to that in a minute. So the junior one looks like almost the same chart. SILJ is the junior silver miners, and probably this looks much stronger to me. It's very it's at a very much higher level than relative to these lows from the second half of 2020 compared to the gold miners and the junior gold miners. I don't know why I didn't have it on the list. SIL. I need to add that to the list. SIL. Okay. So similar thing here. You know, it looks like it's just making a nice saucer base. So I think silver miners are a lot more attractive to me at this point than gold miners. And when we look at the metals themselves, silver looks like it's holding up better than gold, which is really rare for let's call it a down market period. Or maybe it's a bull market and it's just an in-between phase, right? So we're going to look at SIL. Why is that not right? Oh, here we go. Holdings. So here's your big silver miners. Hecla Mining, Pan American Silver, PAAS, Wheaton Precious Metals, First Majestic. And these have different tickers in the U.S., a lot of them. So, like if we type in Wheaton, here's the New York one. Let's look at Wheaton over here, WPM. So I like that this is building the base. This is where I'm going with this. When I see a nice base like this, then the way I like to play it is get some far out of the money stuff, and if it works out and the base breaks out, then hopefully it'll run up and your out of the money stuff becomes in the money stuff, and then you can play it differently after that. Oh yeah, I wanted to look at WPM. Okay, pretty substantial pullback here on Wheaton. Let's look at some of the other ones. PAAS, Pan American Silver Corp. Let's look at Hecla, HL. So Hecla and Pass are holding up better than Wheaton, it looks like. So Wheaton, I remember that used to be like SLW, Silver Wheaton or something like that. Maybe that still exists. SLW. No. I guess they rebranded or renamed or whatever. Happens. Okay, and then so I have not been buying Wheaton. I have been buying Hecla, Paz, and also AG, which is First Majestic. This one to me looks the best out of all of them, of the four we just talked about. This breakout was big and it's holding, above the base. So, I mean, this looks great to me. If I'm going to be adding, it's probably not going to be on the weak ones. It's probably going to be on the strong ones, which, this one to me looks the strongest. I mean, we covered that lesson earlier with the marijuana stocks, right? Like the one that was running fastest, it ran fastest for a long time. It was the better thing to be in. And similarly with the blockchain miners, we're seeing a similar thing where Riot is just outperforming Marathon Patent. And it seems like that's been sticking. So, while that's working for now, I'm going to, just go with that and favor Riot. All right. So now let's look at the metals themselves. First thing I want to look at on the metals, I'm going to just jump here, is I want to look at PSLV to SLV ratio chart. And this is going to be something we're going to want to keep an eye on to watch for problems. Zoom out. So as you can see from this history, like it does get out of line temporarily, and then it kind of falls back to this equilibrium. And PSLV has actually kind of been lagging a little bit, which I wouldn't really expect that over time since 2020. However, it's on the upswing right now. And I think PSLV today was, I think it was up. I mean, look at this volume too, by the way. Like this is, let's look at this just on the weekly. And actually, let's zoom it out. I mean, I'm willing to bet that this is the biggest volume. How far back can we go? This might be, this is as far back as this one goes. So let's look at SLV because that has a longer history. And okay, so SLV had bigger volume in 2020, but I mean, just this looks like to me a market that is turning. On a long-term basis, this market is turning. So if silver's good, probably the silver miners are also going to be good. So the relationship here works like this. Silver in the ground, these miners can only access what they can afford to go reach. And so they have rights to mine certain areas, right? Then they built infrastructure and built out mines to reach silver or gold or whatever it is that they're mining. And so the silver miners have claims on ground that is known to be dense in silver compared to other things that they might uncover there. The other thing about this that I want to mention is the higher the price of the metal and the lower the price of oil, the more the miners are going to run up, because when you have a high metals price and a low oil price, then these miners can afford to go and really dig down and unearth deposits of the metals that weren't feasible to do to reach at lower prices, because when they get that metal, and then they can essentially sell futures contracts and then go get the metal and deliver it against the futures contracts. And if the price is really high, they've raised a lot of money that they can use to go get that metal. And so the higher the price of silver, essentially the larger the basket of metal that these companies are looking at that they can bring to market. And interestingly, the more that they do bring to market, it's kind of self-correcting, because they come in there and they add all this supply, and then that knocks the price of silver back down. So there's a relationship there. And similarly, oil is an input cost for them. It's an expense. So, and it's a fairly major expense. So these are just some good things to know. if you're looking at the miners or energy or commodities, these are some good things to keep in mind. Give me 1 second. I gotta mind my phone for a moment. All right, all good. Okay. So we just looked at the ratio. We looked at silver. We didn't look at gold yet. So let's look at Phys. Let's start with the ratio chart of the Sprott Physical Gold Trust as a ratio to gold. So fairly stable around this level. If this starts hitting some kind of escape velocity on either one of these ratio charts, that's something that, the next thing I would go look at is, do we have contango or do we have backwardation in the futures market? And so if we see the physical ETF running away and trading at a big premium relative to the spider ETF that's not physical backed, and also there's a backwardation in the futures, these are signs that the market is now moving into a different mode. It may be that there really is a shortage of the metals, or some kind of like inflationary pressure that's new, right? And we can confirm that by looking at the bond markets or look for confirmation in bond markets and things like that. All right, next up, uranium. We already talked about uranium, and I've talked about uranium or CCJ on a number of these trading homeworks before, so I'm not going to get into that too much, but I do like uranium as an emerging opportunity. I think this looks like, it's not the first inning, but this is like maybe inning 3 on what could be like a really long, good run. And I look at solar as an example of what you might expect. So if you look at TAN, if we zoom out on TAN, so it looks like we're right around this region on the uranium stuff. Like, it hasn't even doubled yet. So we're in this zone. And so what came to follow on TAN was a huge bull run. And so this is the kind of thing that I'm trying to position ahead of time for. It takes some long range planning, but again, like, what I do and what all my content, all my trading content is about position trading. And so if you try and do position trading without long range planning, then really you find that you're just like chasing stuff and you're a swing trader, really. So position trading is a little different in that we're maintaining a portfolio of positions that we actively manage. We might trade around a core position, and we've got long range plans that are the basis for this. So it's different than most other forms of trading. And to me, it's the most interesting. All right, so when I talk about uranium and I talk about the miners, like, to me, those sectors look like, we're in inning 2 or 3 of what I hope will emerge to be some kind of a trend, like what we see, what solar has been through in the last year, and some of the other alternative energy things, and like lithium batteries and things like that. All right, so let's keep moving, because we may have to do the other half of this list tomorrow. I hope not, but if I have to end the broadcast, then we'll cover the rest of it this weekend. And probably what I want to start doing is this kind of format during the weekends, and get that big picture theme update out of the way on the weekends and not so much on the weeknights, because tonight I had to do a recap about what happened yesterday, and I also have to be ready for tomorrow. I didn't even talk about the one-inch punch trades I put on today. I put on a bunch. So we can look at those, but I mean, that's something I've talked about before a bunch, and so I wanted to go through this big picture stuff because I haven't done that yet on the broadcast. So all right, let's keep moving. XLB, this is building materials, and this is already on a long run. I'm not surprised that the materials sector is doing so well because everyone's trying to remodel their homes and stuff like that, and I think that's a big deal with this ETF. Let's dig into the holdings. XLB holdings. So okay, never mind. These aren't like the home builder stuff and like Home Depot. This is these are like literally like chemicals and materials. I guess I don't have a whole lot to say about XLB. Let's keep moving. This is probably not the right place on the list to put XLB, so I'm going to move it. Let's put it down here. And then get rid of it right here. Okay. Okay, yeah, this flows better now if we get that oddball out of there. So oil, super strong right now. This is the USO ETF. And the format for this ETF changed. So, all this price history is really kind of deceptive. I think they're no longer carrying oil on such a short roll. They had a roll schedule that was very aggressive, and I think it's less aggressive now. And that change happened, I think, in like May or June. After oil went super negative, they changed it. And it's probably a good idea. But it also means that this ETF has less decay built in than it had before. So in some ways, it's less interesting. UNG. So with the cold weather, this thing has been spiking higher. This does not have any regional component. I'm not sure which pricing that they're using. I think it might be like, well, I don't know. I can't really speak to it actually. Hello. What's up? All right. Well, I got to wrap it up here. Let me look at two more. We're gonna look at XLE and then AMLP, and then I'm gonna end it. So AMLP is this is the Master Limited Partnership ETF, and it's just rising higher with oil. Not too surprising. XLE is the energy sector, similar chart. This is probably a better way to invest in energy than USO. And when I do the ratio chart, you can see that. All right, well, I have to end it here. If you liked it, hit the like button. Also, this is a pretty new show, so any like sharing on social media that you can do, or tell your friends about it, whatever, anything you do to help me get the word out, I appreciate it. Thanks so much. Bye.